Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here with your Wednesday morning pre-market webcast. Okay, daily chart of the ES, and this is a chart I put together last night for my subscribers, and it should be coming out to everybody a little bit later this morning. But the key is this: we've got 8 sessions here riding the upper band. The new high from Monday held up yesterday. We did a lower high at 86, and then we never challenged those areas again. The 86 high was pre-market. We traded lower. They challenged and broke the 81 area that we talked about yesterday, and they went down to the weekly pivot, broke through it, and traded as low as 75.25. So the bears did their job yesterday. They absolutely did their job. What they need to do today is to just keep doing what they're doing now. We've traded as high as 81 in Globex, and they traded that down to 73.50. They need to continue to make progress to the downside. One of the big mistakes that the bears always run into is they try to get it all done in an hour or in an afternoon. When that happens, it becomes very easy to come in and buy the dip. I do it all the time because they get ahead of themselves. If the bears want a meaningful retrace, they need to take small, steady chunks out of the market each day until the Bollinger Bands want to open up for them, and then they can have larger days down. So we were testing the 9-day simple moving average, the blue line, yesterday. Tried to hold a support. Now it's broken. What the bears want to do is, and it's 78 and change. What the bears want to do is to hold it as resistance. So let's hop over to a 30-minute chart. So here's your all-time high. Here's your 86 potential lower high. I can do this right now. '86, '81. So we're starting to build the blocks, okay? You can see the stairs starting to try to develop. Here's your daily pivot. Broke down below that, down to S1. We bounced nicely off of S1, but now we're seeing resistance right here at the weekly pivot. Okay, if the bears can hold the weekly pivot area, and it's also the 9-day simple moving average, as resistance, now they need to go and take a look at 68, 69. They need to go take a look at the area of the middle band, which is right down here in the 68s. This whole area, S2 is tucked in behind here. S2, the 68, 69 support area, which a couple weeks ago was resistance, and the daily mid-band is all down here for a test. What happens down here is going to have a lot to say about what happens not only for the rest of this week, but next week and for the rest of the month. You got the Fed minutes today at 2 o'clock. That's going to be meaningful. But watch this area. So far, the bears are steadily doing their job the way they should in order to get a little bit of a pullback. But all it is a pullback to mid-band if they can't get through here. Okay? So if it gets down here and it can't get through, primarily it still needs to be viewed as a buying opportunity. It's still a dip buy until this cracks and converts as resistance and we head lower. At that point, then we'll be in a futures contract that wants to trade between the middle band and the lower band. Okay? That is a sell rallies instrument. Until that happens, we're still buy dips. All right, everybody have a great day. Follow us at Twitter at Princeton Trader. Check out the website. Come check out the chat room. I'll be back tomorrow morning with another webcast. Trade 'em well.